Welcome back. African banks' earnings have taken a knock during the annual period. Profit for the year plunged 31.3% to 505 million. As bad debts are surged, this comes despite recording a stronger second half where the lender started reaping the rewards from its acquisitions and growing its customer base to close to 4 million. Joining me now is the company's Group Executive for Business Banking, Zweli Manyathi. Thank you so much for your time, Zweli. Now, that hit that we are seeing in earnings for the full year, would you attribute that solely to the first half? And would you say that maybe the second half was smooth sailing or maybe just less pressure than the first half?
Yeah, thank you very much for having me. The second half, as you can imagine, South Africans continue to be under pressure, so it was just less, negative. And there's also the back of the work we did towards the end of last year and early this year, just to address ourselves to the challenges of impairments. So it was a combination of some kind of respite, but the work that was done to address the issues.
Yeah. I mean, the African banker consumer is heavily susceptible to the macroeconomic challenges. So how are you navigating the need for that customer? The need, to access debt still in this kind of environment, as we do have a scarcity of cash, but also getting to a point where you are protecting your own balance sheet in terms of limiting those credit impairments.
What's been interesting is the underwriting that we've been doing in the recent past. We've seen very, very good quality of customers, and that you can see in the performance in the early vintages. Much better this vintages than it was in the last ones. So, and we continue to be very, very selective in who we give credit to. So a combination of those has got to be the way we do this, because the pressure is going to be on until the economy turns.
Yeah. And I mean, obviously, you've spoken about the measures and the strategy moves that you took late last year. Of course, that's the acquisition of Grindrod Bank and Ubank. How is that filtering through to the bottom line?
We've actually seen very, very good progress insofar as integration, and secondly, the new customers that we have, and the profitability of those two acquisitions. It was actually a very, very well executed strategy. We're very happy with what we did in those acquisitions.
And I believe that the integration of Grindrod Bank is still going on. So what will you be focusing on in terms of scaling up your business banking offering as this integration continues?
So to a very large extent, the integration insofar as customers as well as people, that's done. And we just are going to go through a process of divisionalizing Grindrod Bank as soon as we get the go-ahead from the Prudential Authority. And insofar as offerings are concerned, it's actually two things we're doing now. We're driving the organic growth. We've got 50 strong team in our coverage business, and their job is to go out there, meet customers, understand their need, solution for them, and that is going very well. The second piece that we have been doing is just continuing to build, especially in the transactional banking space. I'm proud to say to you, our first account for entrepreneurs or businesses is available now. And we have got internet banking that's available now. So last time we spoke, we didn't have those things. I was talking about them as dreams, or plans rather. Those are in place as we speak. And you would have heard us talk about a binding offer that we entered into with SASFIN, in terms of which we have said, subject to regulatory approval, we would like to buy, and they've agreed to sell to us their capital equipment finance as well as the commercial property finance.
All right.
Property commercial finance is going to add to what we've got. we've got a very, very solid commercial property finance. On the capital equipment finance, that's a new solution for us. Very exciting. We can do asset-backed lending, and we get a team of about 31 people to join us from that business. So that's another exciting integration that I need to make sure that the team execute well on, and we'll give more and more solutions to our customers. So excited.
Yeah, I mean, Zweli, as you're talking about these plans, I've noticed that the key theme for African Bank is diversification. And as much as you have benefited from the high interest rate environment, you did have your net interest income up 21%. You also did have your non-interest revenue more than doubling. And I'm wondering, you know, obviously we will get to a point where interest rates are cut, where if this now puts African Bank on a firm footing, even when you are not benefiting from those high interest rates.
Continues to drive transactional banking is important for us. As you saw, our non-interest revenue, we've done extremely well insofar as that is concerned. I must, however, stress that we haven't seen the benefits of business banking contributing towards that, because we just started with our transactional product. And there's other plans that we have to make sure that we not only stay at the top of the pyramid, but we continue to come down. And as you come down the pyramid, you should get high volumes of transactional customers. You can get retail deposits that will reduce our cost of funds and therefore improving our NIM. So that actually creates an institution or a bank that is more than balanced and much more resilient in a through the cycle environment.
All right. Well, thank you so much for your insights, unpacking those numbers for us. Of course, we will be looking out for more developments happening when it comes to Accelerator 25 strategy as you are halfway through that and as you continue to implement your step-up initiatives. Thank you so much for your time, Zweli. That was the Group Executive for Business Banking at African Bank, Zweli Manyathi.